Good day, ladies and gentlemen, and welcome to our class on Japanese candlesticks for both the novice as well as the experienced trader. Now, candlesticks are a form of charting developed by the Japanese rice traders in the 17th century. Okay, we don't need to go into all the other stuff, but it's been around for a long time. It didn't come to the Western world until much later than that, and it really did not become very popular until we had online trading and computerized charts. Because back when I started trading in 1972, everything we did was hand charting. So we would sit there with graph paper and we would write, and draw our lines on the chart, and we would wait for the ticker tape to come through and give us the prices. And granted, the markets moved a lot slower, but drawing candlesticks on a chart was cumbersome and time consuming when you're having to do everything by hand. But some people use them. Most of us use bar charts. As time moved forward and we got the new HTML and Java charts and all these computerized charts, and they gave us the luxury of not only being able to put the candlesticks on a chart, but able to adjust them and do whatever we had to do, they became the rage of the online trading market. They are more popular today than any other charting method. Now, candlesticks give us important information about what is happening in the marketplace. Each candlestick represents a data set of the complete price action during a selected time frame. So whether you're looking at a 15-minute chart, a half-hour chart, a 2-hour chart, a 1-day chart, each candlestick represents one of those time frames. So if you're looking at a half-hour chart, we are looking at a candlestick every half hour. If we're looking at a 1-day chart, each candlestick represents 1 day, no different than a bar chart. Selecting our time frames is based on our trading style and our information and what we need to do. But candlesticks are no different than bar charts, no different than most indicators. The only data they have is the open, the high, the low, and the close of the current period. Let me get my marker on here. There we go. So, for a candlestick, we draw a line across at the open of the current period. We draw a line across at the close of the current period. We put a dot at the highest price and a dot at the lowest price of the current period. We then connect the dots to the bars, or the lines, and then we connect the lines to the other lines. And this gives us what is known as the body of the candle. These are known as the wicks of the candle or the shadow. So it's pretty easy to do. It's no different, like I said, than an OHLC or than a bar chart. Now, what is the difference between the red and the green? Well, when your close is lower than your open, you would fill your candle in with red because you had a bearish period. When your open is lower than your close, in other words, the price moved up in that time period, having nothing to do with the shadows, just the open and the close, you would then fill in your candlestick with green because that was a bullish session. Now, you'll hear a lot of things related to a black and white candle. Black and white candles are the same as red and green candles. It's just that in the old days, yeah, you can stop laughing at me. In the old days, and we were hand charting, you would use a pencil to draw your candlestick on your chart, on your graph paper. And if it was a bullish session, you would just leave the candlestick hollow. If it was a bearish session, you'd use the side of your pencil and fill it in. So you ended up with black and white candles. But technically, it's no different. You could decide you want to use yellow and gold. As long as you know what represents bullish period and what represents bearish period, is completely up to you. But of course, in our industry, the standard is red and green today. Let's clean this off. So, as you can see here we have black and whites. But we have the upper shadow, the lower shadow, and the body. Now, these four pieces of information, these three pieces of information, upper shadow, lower shadow, and a body, tell us a lot of information. The size of the body can tell us about what is happening in the markets, and the wicks can tell us where the market has been pushing and pulling from entirely. Some people, okay, depending on what you're using, only are concerned with the high and the low of the market, and not necessarily the open and the close. Okay. Depends on what strategy, because they believe that the markets will push to new highs and push to new lows, and they know that the market should close somewhere in between. Well, first of all, it would always close in between, but they're concerned with, is the market making new highs or making new lows? Okay. But compared to traditional bar charts, many traders consider candlestick charts more visually appealing and easier to interpret. Every candlestick provides an easy to decipher picture of price action. So the first thing, before we get into candlestick patterns and candlestick analysis, it's just reading what the candlestick is trying to tell you for that individual time segment. So remember, we want to know, what does the shape and the size of the candle tell you? Well, it tells you the story of the fight between the bulls and the bears. And there's only certain things that can happen. You can have average or normal bodied candles, okay, with kind of evenly spaced wicks. There's no rule about how much they have to be, but that tells you if it's a white or a green candle. It tells you the bulls are in control. If it's a red or a black candle, it tells you the bears are in control. When the bodies get short and tight, we start to see indecision. Okay. Indecision means the market is not sure what it wants to do. That, accompanied by long wicks in either direction, might tell you that the bears dominated the market during the trading session, but before it closed, the bulls were able to keep it back up by where it opened. Okay. Or on the other hand, if it's a red candle, that the bears were able to push the price way down. They had lots of energy, but they petered out, and it was able to close close to the open. So it tells us the story of the bulls and the bears. But don't get yourself lost in a psychological response to a group of reds or green candles. These do not say to take a position. Okay, and this is one of the problems. Too many traders get themselves stuck on seeing lots of red or lots of green and making trading decisions. So as you can see, we have a normal candlestick chart in front of us, and the amount of reds and greens that we see on there really tells us nothing. What we're looking for is the relationship of one candle to the next, to the preceding candle, the relationship to the trend, and the size of the candle. So you can see on here that we have lots of what we call indecision candles. We get smaller and smaller ones in there. We have, right here, we can see what's called a doji. It's total indecision. Look, the open and the close were virtually the same. Here we have two smaller bodies that come right after a huge move upward, and we have still indecision. Okay, traders are trying to decide whether they're going to continue pushing the euro dollar up or whether it's going to return to its downtrend. Okay, we also have patterns. Like here we have what we call an engulfing pattern, okay, where the new candle fully engulfs the previous candle, and they're of opposite colors. So what that told us there is that we had reached the bottom of that downtrend and that the market was reversing, and it truly did. It turned around from that point when we got the bearish and the bullish engulfing candle and moved straight up. It told you if you were in the market, short, get out. If you're looking to get into the market, it's telling you here's an opportunity because the trend is reversing and you could have entered the marketplace. But when we look at candlesticks, we have to keep in mind that there are all types of patterns. Okay, there are a total of 32 basic chart patterns. Some of these incorporate a single candle, like we were just looking at a doji. Okay, We were looking at indecision candles. We were looking at, there's things called a harami. There's marabuzu. All of these tell you something about the market in that time frame, but on the other hand, really can't help you with a trading decision because it's only one candlestick. Okay, it just alerts you. But then we have multiple candlestick patterns. When we have two candles, like I showed you with the bullish engulfing, that's telling you that something has happened. Looking at where it is in position, looking at how it's developed, and you have something that's happened. Then we go on to the very reliable three candlestick patterns. And this incorporates three completely different time frames, three candles, and when they appear in this combination, they are telling you something about what you should do. Okay. Now, you can memorize them, okay, or you can just realize when you're looking at the charts that you see something. You don't need to memorize the name. You don't need to know that this is a marabuzu. Now, marabuzu up here is very easy to spot because it's got no wicks above and below. That means if it's a bullish marabuzu, it opened down here and the bulls did not give up 1 second when it closed at the top of its price. Just the opposite here. Spinning tops look just like spinning tops. Dojis look like crosses. Okay. So you don't have to memorize all these names. You just have to have your eye ready to look at these patterns and know what to do. And this is called pattern recognition. Now, really, in the scope of things, pattern recognition doesn't work great for short-term trading because it takes longer time to develop, and in the markets and the candles are moving so fast because when you're looking at a 5-minute chart, a 15-minute chart, a 30, they're popping up faster than you can actually keep track of them. But knowing them and seeing them when they occur can help you make smart trading decisions. So we talked about the marabuzu, we talked about bullish and bearish, we talked about spinning tops and dojis, we talked about them in conjunction with the trend, and looking to see the combinations of where they appear and when they appear. Now, so before turning to the single and multiple candlestick patterns, there are a few general guidelines we need to cover. So now that you have the basic idea of what candlesticks indicate with their bodies and their wicks, let's cut our teeth on some simple and uncomplicated patterns. They are common and quite likely to appear before you in a normal trading session. So knowing instantly what they mean and taking the proper trading decision immediately could make the difference between a winning and a losing trade. So we mentioned already the standalone candles, but they happen often. Okay, then we have things like shooting star and inverted hammers. I don't pay any attention to them. I don't trade from them. Other people do. I actually don't trade from any pattern recognition. I use candles in charting because I like to see, because you can use candles just for charts, because I can see commonality between wicks. I can see commonality between bodies. I can see who's in control. Okay. So you can use candlestick charts without using candlestick pattern recognition. And then you can use candlesticks in conjunction with trading strategies. Like if you attend my class on the indecision strategy, and that's when a candlestick, a doji, appears, or in what we call it in that case an indecision candle, appears directly on a support or resistance zone. Okay, and you can come watch that video. But memorizing all of these isn't so important. Understanding them, so if you do see them, you know what's going on, and knowing how to read price action with candlesticks is much more important. So we've talked about building a candlestick chart. We've talked about understanding and reading the candle. We've talked about the different shapes and sizes, the formations, the positions. We've talked about dojis, haramis, tops and shadows, bulls and bears, hammers and hanging men. So now it's time to learn about multi-candlestick patterns. And as I told you, there's a lot more than just reds or greens on a chart. Now, the chart you're looking at, I didn't make up. I found it on the internet. And I don't call them Lonesome Cowboys and 2 for Tango and 3 for Musketeers. That's whoever made up the chart. Thought it was a cute name. But it's 1, 2, and 3 candlestick patterns. Okay, 1 candlestick patterns are just information. 2 candlestick patterns now occur much rarer because you have to have 2 candlesticks doing something together. And then the 3 candlestick patterns are very reliable. And things like 3 white soldiers and 3 black crows, when they occur, can tell you something very important about the markets. So there are 16 basic important shapes that you should recognize off the bat. Okay. Now the fact is, right now you're probably sitting there saying, what is all this stuff? Oh, I lost my PowerPoint. Okay. And this is where everybody gets really messed up with everything. Because they say either I'm inundated with information, I'll be so hindered in my trading, I'll spend my time staring at charts looking for patterns. So I'm going to quickly show you easy ways to incorporate candlesticks into your trading. And let me pop up the internet here. Okay, and I'm going to first go over, we're looking right now at a trading view. Okay, we're looking at a candlestick chart for the Euro US dollar 30-minute chart. It is my standard teaching chart. Now, if we go under indicators and look in scripts, we can find a script that gives us candlestick patterns. And I've already clicked on it, and we're going to drop it on the chart. And look at that. All of a sudden, all the patterns that are on there are popping up and pointing to right when they're happening. Now, I've already cleaned this up a little bit for you, but here, if you look at this, you can pick and choose what inputs, what patterns are important to you, okay, and how reliable they are and how you'd like them to appear on your chart. And then you never have to look for them again. Your chart's just going to tell you that here we just had a bearish engulfing, or here we just had a bullish. So you'll see them immediately upon execution. That's one way. Another way is sites like investing.com will put candlestick analysis directly on your charts, on their charts, and because price doesn't change, charts don't change, chart patterns don't, you can just get them from there and then actually just drop, use their scanner and drop them on your charts. So like here, I've already set this up so you can customize it. What time frames you're interested in seeing, okay, whether you want to see completed or emerging patterns, bullish or bear, how 1, 2, or 3 candlestick patterns, pick the assets you want to track, and then just click on apply. And what it does, it tells us right now, on these assets that I've chosen, here are, and in the time frames I've chosen, here are the patterns emerging. So like we see in crude oil, we have currently a 3 black crow, which is a very high 3 pattern formation. Okay, you don't remember what it is, you can just click on the line, it's going to tell you everything. And it's telling you right now, it's a bullish reversal that's happening. So that's one way, and you set up the scanner, it'll even send you alerts. The other way is you can actually drop them right on the investing.com charts, and as we go along, I can see them as they're developing on the charts. And then whatever charts I'm using for my daily work, I just circle it on that chart and know it's there. So I'm not wasting my time trying to find candlestick patterns. I'm wasting my time, or I'm making my time more valuable by finding high probability trading opportunities. But now that your head is swimming with a whole bunch of information and you're saying, uh-oh, what should I do here? Well, my advice to you is to get familiar with the candlesticks. Don't spend too much time memorizing anything. Don't get wrapped up in the 3 candles, the 2 candles, the 1 candle. Recognize what the charts are telling you, what price action is trying to tell you. And then if you decide to develop it into some type of a trading strategy, okay, or you can build a whole trading strategy around bullish or bearish engulfing patterns only. Okay, and when they appear, you've got 2 other things your system looks at. For instance, it looks at support and resistance and a trend line, and you can make a trading decision. And you don't have to get involved in all this other stuff. So don't let it scare you, but don't use preconceived notions that the reds and the greens are telling you much of anything. And learn to read price action by looking at the bodies and the wicks of the candles. That's going to tell you more about what's happening in the markets than anything else. So thank you for joining us today. And while you're here on my YouTube channel, go look at the other classes. There's lots of classes on incorporating a particular candlestick into your trading method, and there's a lot of trading strategies here. So thank you once again, and good luck trading. Bye now.